Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you for our weekly stock market analysis for September the 29th, 2019. This past week, stocks declined across the board, with U.S. politics dominating the news headlines. House Democrats announced the initiation of an impeachment process and inquiry into President Trump. This development does add additional political risks to the overall market. However, other macroeconomic and domestic indicators ultimately would drive the direction of a bearish or bullish moves in the overall stock market. As examples, still the back and forth between the US and China in regards to overall tariffs, Brexit inquiries and hesitation of moving forward with exiting the EU, Federal Reserve monetary policies, as well as the repo market. As we close out the end of the month and the end of the quarter, let's take a look at our monthly charts as we normally would do in addition to our weekly data. So we have in front of you a 3-year monthly chart for the SPY, the S&P 500 ETF. As you can see, we still are closing out pretty bullish for the month. However, we did see some pullback over the last few days as this domestic information has pulled back the market to bring us back into our value area, roughly about $295 on the SPY. And we do see this as a slight bearish signal. However, we still will close out the month despite a pretty significant pullback. Barring some major dramatic news coming into Monday of the work week, we still will close out a bullish month, which will be an indication for the longer term investors that there still is this bullish trend moving forward. Now, we do see a potential opportunity given any type of major news from a tariff perspective that coming into Monday, we do see a potential reversal. However, that is still 50-50 as we look at the possibilities of a nothing move. Now, as we watch and move forward, we still see a pretty significant trend line that's still held intact from a bullish perspective on the monthly. Now, we don't see that being breached, but we do see an opportunity. If there is some type of support, it will come in roughly about the $286 amount, as we do see a nice low volume node where there is a rejection of the auction coming back for multiple months, actually going back almost into the mid part of 2018. And it does coincide with our 9 EMA as a potential opportunity for some type of support, roughly about the $286 amount. Now, we don't feel that we will touch that coming into our Monday session, but looking longer term, this is an area that we would look at for some type of support for continuation of our bullish move upward. Now, we'll move on to our weekly chart. As we did denote, we did see a pretty significant decline toward the latter part of the week as the House of Representatives did announce some additional political moves against President Trump and a nice sell-off as there were threats of a declining conversation with China in regards to overall tariffs. So from a weekly perspective, we do see a bearish signal. At the same time, we did test that 9-period moving average as we communicated in our last week's video, and we did see a very nice bump upwards to kind of come into close right where we anticipated, roughly about the $295 amount, which did coincide with our value area high. So from a weekly lens, we do see a continuation of a bearish signal. However, depending upon what our longer term traders do in this 2 to 3 week consolidation period and pullback, we do anticipate a return upward from a bull perspective with some positive news coming out of China. However, we do see an opportunity for us to test this shorter term trend line, which will map out for you a little bit here. And that does somewhat coincide with our 20-period moving average and our point of control, which is the highest volume at price, which is coming in at about a $290 amount. So we do see there's a quick test back into range this week with a potential reversal. So we do see a test back down, test these moving averages, but what we do anticipate, barring something dramatic, if there is some type of rejection here as our both 9-period and our 20-period moving average look to coincide and collide, right around this trend line here, there should be some type of bullish reversal back up about range. And if that does happen, we do see a test potentially of some all-time highs again. So we'll watch and keep ourselves engaged and let the market tell us where she wants to go versus having a very rigid hypothesis moving forward, because it could move in either direction. Again, we'll jump now over to the NASDAQ and we'll pull back and take a look at our monthly charts. Now, there is a good probability that our monthly chart on the NASDAQ does close with a bearish movement, which would be a pretty significant move from almost our all-time highs of about $195 over this past month. We did see this pretty significant pullback, but we have touched into a longer-term trend line going back into 2019 on the NASDAQ. Obviously, the NASDAQ is very technological heavy, and there's a significant amount of exposure with the China tariffs. We did see this past week a reduction of about 1.75% in regards to price. Now, we do see some longer-term support coming in at roughly the $183 amount. So we do see a potential retest for that. Now, we will see this a little bit clearer as we jump into the weekly chart. We do see a low volume node here at about $183. And we do see an opportunity for us to take advantage of these opportunities as we do pull back into range, but potentially stepping back upwards, moving into the latter parts of the week. Now, if we do see that, we do see an opportunity for us to come back above range and retest as an opportunity, maybe over the next week, 2 weeks, and potentially looking at a new all-time high. Now, conversely, if that does not happen and we do see acceptance below that $187 amount, and we do breach this $183 amount level roughly around here, we do see a potential of us moving all the way back down into range as we look at roughly about $187 amount level, $175 amount level as a longer term opportunity for some type of support. Now, that will be determined heavily on the direction that we do see, or lack thereof of direction, from China tariff type conversations. So we'll see how that plays out, but we do see a little bit of support here at value area high at roughly about $187 amount. Now, if price continues to oscillate within this range here, we do see some opportunity for us to kind of break below trend line and move forward. So we'll see how that plays out as we move on to take a look at the Russell. And we'll pull back here and take a look at our monthly charts as well. As you can see, the Russell still is showing a bullish trend on the monthly. However, we do see an opportunity as it's pulled back a little bit greater than 50% from its highs, and a failure of its trend line, roughly about $160 level, $158 level, excuse me. And we do see there is a nice pullback into range, and we do see some stronger support, roughly about $145 amount as we call out here, which coincides with our weekly value area low line. So that if we do see a reduction over the next day or so, there is an opportunity for us to step in at roughly about $145 amount. We don't anticipate that happening over Monday. That's a pretty significant range pulling back in just one day. However, just last week, we did see a very aggressive pullback as we switch out to the monthly chart. We did see about a 2.4% reduction in the Russell over this last week as the U.S. political information has weighed heavily on the U.S. economy and U.S. companies. So there is an opportunity for us to look at a potential rebuy if things look to continue to stabilize for our U.S. economic information. As you see here at roughly about $151, $150 level, we do see some pretty significant support as we bump right off of our 50-period moving average for a potential reversal right back up. So we'll watch ourselves. Now, over the last few weeks and last few videos, we have clearly communicated there's a lot of indecision within the market. So we do want to pay close attention to what takes place in the news cycle. Now, we do believe that the market has embedded a lot of this information already into its prices. However, the market is very sensitive. And as we've always communicated, the market does not like uncertainty. And there's a lot of uncertainty here in the United States, companies, as well as our political, as well as we're heavily influenced from macroeconomic news coming out of China and coming out of the United Kingdom. So as we move forward into Q4, we do want to keep a small eye on information that comes from our news cycle, which has consistently impacted direction in kind of a push-pull type fashion over the last few weeks or so. With that, we'll close out this week. And as always, it's your money and it should be under your control. Take care.